Hey guys, the stock market's still going down, but our picks are still going up. Let's see what 4 picks we have for this week right now. So, what about those stock picks for today? That's what I'm interested in. This is the fun part. Our first stock pick is a stock pick that I thought would never come back onto my buy list, but guess what? It is back on my buy list, but Neil is the one who it's on his list too. So tell us about NVDA and why you're bringing it back and wanting to buy it.
Yeah, NVIDIA, if you look at it for last several months, it was in jail. And
Yep.
by that, the accumulation distribution was E. And I've never seen anything like that where for months and months it just stayed there. And this particular week, I was watching it, it changed from E to D plus to C. And today I believe it's at B minus.
Okay.
And it has actually broken out if you look at market smith charts. And so something's going on. I think heavy buying is really going on. It's a stealth buying, but it's coming out now.
Okay.
So it's back on my list. And I bought it yesterday.
All right. So you bought it yesterday. And I think that NVIDIA is one of those stocks that the Magnificent Seven, these are stocks that we probably want to be invested in a big way going into the rest of the year. So NVIDIA, I like it absolutely. My pick for the week, as far as a stock goes, is CRWD, CrowdStrike. This is an absolutely crazy, not crazy, but this stock, again, further disclosure, AutoPilot Trading, we have been in CrowdStrike. Entered CrowdStrike. You're going to just blow you away. Neil, I don't know if you were able to trade this with us when we got into it, but we entered CrowdStrike all the way down here last year. And we've ridden it, and we still have a few shares left in that. I think it's going to do amazing things and going into the future. Like NVIDIA, I really like that big green candle. So I would be looking for a pullback back into the midsection of this big green candle right here, which is going to correspond to this breakout area here. Just a pull back towards the breakout. That's what I'm looking for. And by that time, my opportunity to buy a Neil would be in between the 8 and the 20-day moving average. That's my potential trigger. I also could get a little bit lower to the uptrend line itself, where I could come back here, bounce off that uptrend line and go. But as I like to say, we always look to buy things wholesale and then sell them at retail. And that's what we did when we bought it down here at 175 and we sold a bunch of it on the way up. Now I want to reload at wholesale so we can basically continue to ride this. CrowdStrike is just moving forward. 99 on the comp rating. The up down ratio, believe it or not, was a 2.3, and the accumulation distribution at A plus. So what do you think?
That's a amazing stock. I was looking on the triple screen and the weekly buy signal on it came around April the 10th or so and has not gone away yet.
So that would have been right. There's May of last year, and April was back in this area here. Yeah. So like I said, it has just been a beast. Speaking of other beast, and you're going to really want to hang with us, guys, because I've got some leverage ETF surprises for you coming up. So, Merck is your why Merck?
Yeah, that's unusual because this is based on my new research that I'm getting more and more into it is if you look at the SMR rating on Merck, that's A.
Right.
Accumulation distribution is B plus, and up down volume ratio is 1.6. They're all great numbers. The only thing that'll go negative is the comp rating, and I think it's somewhere in the 70s.
Yes.
But I'm paying less attention to on comp these days and more on the accumulation distribution and up down volume ratio. What's other thing that's going on for Merck is the EBIT compounded annual growth rate is about 80% last 3 years. And so there's something's going on with
Mm,
the company where the analysts have rated such a high growth rate.
yeah.
So It caught my attention, and that's the reason it is here. Delaware focus list last week.
Now, are you buying it right here or have you already purchased it?
No, I purchased it.
Yeah, this sounds good, guys. And again, this is a stock that we're not, Anil is not saying buy it right now, but again, apply your rules to it because the one thing that's really cool for both Anil and I, we have done it, and the people who are online can vouch for us. We've done one heck of a great job of picking stocks since we've been doing this that have provided some awesome results for our members. Now, let's have some fun. It is time for Anil and I to start talking about what the heck is going on. So today's burning question is, why do unsuccessful traders keep making the same mistakes over and over again? Now, Anil, you asked that question. Is it because you have some personal history with that question?
That's interesting. The personal history was with me in particular. And so I researched it also. I'm still working on it and we'll have more to say on it. But in a nutshell, it's built in our identity and our belief system. And unless you tweak it, it keeps on. Because if you look at the overall stats, about 70 to 80% of the individual investors don't make money in the market.
That's right.
And that's a huge number. And there has to be a reason for that. And that reason goes down into the belief system. So I'm searching on it and finding some good clues.
Could you share a couple of the clues? Or have you already done that?
On a large scale basis, our belief system is built on our five senses: touch, feel, smell,
Right.
etc. And then it gets ingrained and you do it in automatic. You're on autopilot to follow the system unless you consciously go in there and tweak it and change it.
That's really interesting. And I really think that it's from my experiences and research and that type of thing. I have to ask myself, why do so many traders keep playing the same old broken record? I know in my case, the reason I would keep making the same mistakes is first, I didn't have written rules and a process and a routine and a system. Then the second major reasons why I kept making the same mistakes is I wouldn't follow the rules and routine that I had set up. And then you have to get a little bit deeper and cut back the onion a little bit more was why. Part of the reason with me is one, I, well, I won't blame it on being an engineer, but I think I can blame it on the thought process and beliefs I have as an engineer and thinking that I'm a really smart guy. And so I can tweak things, make it better and all that kind of stuff. And I'm going to take whatever I see and fix it and make it better. And in reality, there are some very simple processes to follow, especially in swing trading. You don't have to fix anything to make it better per se. And there's a lot of systems out there like the AutoPilot Trading Service that is a proven system. And then the second reason for me is I had to be right. And so I would argue with the market. Even though my rules told me to do one thing, I would say, no, I'm brilliant. I have to be right. And therefore, I'm going to not put my stop losses in because I know this market is going to turn around. And boy, that cost me a lot of money.
Yeah, and one thing I can add, I think in your system, why your system, Autopilot, is working so beautifully is if you look at again in the last picture, you have taken emotions out of it. And that is a huge good point that the emotions are out of it, the rules are made, and then the system fires the signals and make you take actions.
Oh, yeah. It is literally because we have our fire and forget conditional orders. And now we have, even for our premium autopilot members, we have what we call the rapid fire order entry system. And so literally folks can get the stocks that I'm going to be trading in ETFs, I'm going to be trading every week on a weekend. And they literally can go immediately over to Thinkorswim, adjust it for their own risk profile and plug it in and literally cut and paste the orders and they're good for the week. And then the market's going to do what the market's going to do. I think the other thing that drives this question, Anil, is not accepting and recognizing what we have control over in reality. is a big thing here on why people keep making the same mistake. Neil, thanks, man. That is just absolutely spot on. Thanks for that question. Hey, if you're finding today's session valuable and you're ready to take charge of your trading journey, hit that subscribe button and share the links to the YouTube channel or share Autopilot Trading with a trading friend of yours. Now, let's have some fun. Neil, I'm looking at, just in case the indexes decide to just poop out. And if they do, I want to be looking at TZA. That's the leverage inverse ETF for the Russell. I still think the Russell is on wobbly legs, and that the Russell, let me get up the IWM and I'll show you what I'm talking about. The IWM has already put in a topping process. Now we may rally back up into this area here, and it could go either way. And so I'm looking for, are we going to bounce here? Are we going to go up? Longer term, and let me show you why. Longer term, because my weekly momentum has in fact turned down, and my market forecast on the weekly channel may be rolling over. I'm looking for a retracement all the way back down to at least the 50% retracement or the 38%, or this is a 618 replacement down here, depending on how you measure it, about the 177 level. What does that equate to an upside profit target on TZA? If I get that same type of pullback back into these areas here, let's say we get another pullback in the midsection of this big green candle here, I'm going to throw on a Fibonacci just real quick. We're going to do this really quick for folks from high low. And if it runs up 50%, that would give us a potential for a move. Again, I'm looking for just a regular 50% retracement. That would give us a opportunity for a 37% upside opportunity. So that kind of stuff really excites me. I'm looking for things in my leverage ETF, Anil, that will have runs of 25 to 35% at one time. If I can pick up 15 to 20% of that, and it happens 4 to 6 times per year, that compounds out at over 100% for the year. So that really helps with your return for the year. So that's what I'm looking at.
I'm looking at on TCA, I'm looking at the triple screen charts, and on the daily chart, the MACD has just turned around.
Okay.
So that's interesting. It may be going in the right direction.
Did you know that traders who journal have a higher probability of success? And this tool is a brand new tool that we just launched over on the Amazon, is the AutoPilot Trading Journal. And it's your roadmap to disciplined trading, because it has all my rules and all the autopilot stuff on the inside, plus a really great opportunity to set up a journal to help you track, analyze, and refine your strategies. And I'll put the link over in the description in case you want to go check it out. And if you've already gotten one of these and enjoy using it, please leave a review over there on Amazon. I'd really appreciate it. Remember, the key to overcoming inconsistent trading results lie in both education, discipline. So to strengthen your trading muscles, we'll be highlighting a couple of playlists here that'll pop up. And remember to subscribe and share. Just a reminder that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. And past performance is not an indication or a promise of future performance.